Hello everyone, welcome to our second webinar of this year's to give you will the Thailand stock market outlook and the stock pick for the month of February. Before I go to the outlook for February, I'll wrap you up about the what happened in Thai stock market in January 1st. We faced with a quite highly volatile set index movements as uh, we saw the sharp springs of the set index in the first half of the month to its low around 1220s or down around 5% from last year ends before the index rebounds to end the month at around 1300 levels, slightly improved from the level of 1288 ending in 2015. So for this February, we expect to see quite the same trading patterns for Thai stock market with a little upside bias. As we foresee the further improvements in the short-term sentiments, along with our PSR fears and greed index pickups, which will give you more details later. Um, First, I think we'll move to the key factor to watch for this month that will affect the market sentiments. From external fronts, we still wait to the global economy concerns would be the most important factors to investment sentiments as it will impact the monetary policy movements from several central banks. As we can see that almost all central banks still stick with the policy easing, except the U.S. Federal Reserve that will stay in the tightening way. However, with the concerns with the global economy, especially the impact from the China economic slowdowns, we think the pace of the rate hikes from the U.S. Federal Reserve would be slower than everyone expects from last year. For Thailand, actually this report released in the February the 2nd, and in the meetings of in MPC meetings in Thailand that held in February the 3rd, our Bank of Thailand already announced to keep the reference rate unchanged at 1.5%. That's in line with our forecast, as the Bank of Thailand still view that our Thai economy and inflation gradually recover in the pace that close to their assessments at the previous meetings. As you can see from the chart in the right-hand side, our CPI index is gradually improved, and the rate at around 1.5% would not be the threat to our economic concerns. And on the right-hand side table that show the reference rates of Thailand compared to other peers, we can see that our Thailand's interest rate at 1.5% still in the lower range compared to others like 3.25% of Malaysia or 2.5% in Philippines. However, we think the Bank of Thailand still open the door for the rate cut in the futures if anything happens or worse than they expect in the economic fronts. I think Bank of Thailand still have the room to cut the rate in line with other peers. And we'll move to the second factor that will affect the market sentiments from our internal funds. This is the chart that show the short-term trading emotions that the PSR fear and greed index that was developed to measure the short-term investor trading emotions in Thai stock markets and most of the indicator we use is based on the indicator used in CNN Money, Fear and Greed Index. And what is the index telling us is for the index that holding in the extreme fear zone for over 1 or 2 months in December to early of this January before gradually picking up, enter to the from the extreme uh, in holding in the extreme fear zone and then entering to the fear zone and now is heading to the neutral zone that quite gradually picking up that we expect to see further improving of the index or market sentiments in the short terms. However, we expect to see only limited upsides from now. As we see this from this chart, you can see that looking back, this index has reached the zero line or zero level for several times last year, but they failed to break through the level. And after that, they'll follow by the quite sharp plank. So it's matched with the fundamental factors as well as we expect that the economic factor would still be the concern or the major concern for stock market sentiments all over the years. And we also expect to see the political atmosphere to be heat up in the second and the third quarter of this year, um, along with the calendars, constitutional drafting calendar that uh, will expect to see the draft of the constitution in April 2016, and it will lead to the national referendums in the third quarters of this year. So during the ways, we think there was um, so much criticism along the way. So the political factor would be coming into the Thai stock markets in the second and the third quarters. So the upside may be limited. But however, in the short term for this month only, we think the other important factor would be the corporate earnings seasons and the dividend announcements after the release of the full year financial results. And that would spur the speculative buying in selective sector and stock as well. So for the market outlooks, even though we believe the bias is tilted towards the upside for the Thai stock amidst further improvements in the short-term sentiments, the room for the upside appears limits on global economic worries. In Thailand, the graded weights would continue to be given to the earnings, uh, followed by the local politics during the constitution drafting process. However, it seems to us that the political temperature will not heat up until the second to the third quarters when the draft charter is put to a public referendum. So the trading range for set index is expected to be between 1260 to 1340 points for this month. The equity exposure should be maintained at 50% of the short-term portfolio, with focus on the earning and dividend play. And this is the model portfolio by our research teams. For the addition for this month, we picked 3 more stocks added to the portfolio, which are the Group Lease and SPCG and the TKS Technology. And this is the list that we still hold in our portfolio, including the Sisawat Power, SC Siam Cement, BDMS, Chow Gan Chang, BJC, heavy industry พฤกษา real estate TNB beauty community สยาม wellness group Robinsons department store, Platinum Group, and Bumrungrad Hospital. And this is the three stocks that we delete from our model portfolio. And we took profits from AAV, and Asia Aviation, and SBI, and also cut loss in Advanced Info Service. Next, we'll move to the details of the three stocks that we pick or add to our model portfolio, which Khun Sasikorn will give you more detail about all those three stocks.
The first stock of our pick is Group Lease. This is a motorcycle hire purchase company. The company has business in Thailand, and a few years ago they invest in Cambodia. Since third quarter of last year started to break even, and they also invested in Laos also. Performance has been doing quite well. Market cap of this company is around 880 million US dollar. 9 months performance has been quite stellar, and we expect the fourth quarter to be strong as well, boosted by continued strong growth in hire purchase business for Honda motorcycle and Kubota tractor for its subsidiary in Cambodia. For the whole year, we expect net profit growth of almost 400% year on year to 549 million baht. Looking into next year, we expect solid growth from overseas business would be key driver to GL performance. Among the key driver would be SME loan to car dealers and new business in Cambodia. And they are also planning more aggressive expansion in Laos after break even last year in a short time. And just recently in Indonesia, they partner with J Trust Asia of Japan. We expect more clear business coming out from Indonesia this year. We estimate full year 16 profit at 805 million, up 47% or year on year, based on revenue growth of 33.5%. For fiscal year 2017, we expect revenue growth of around 30% with profit growth of over 30% also. Looking from the year 2016 to 2018, we estimate compound annual growth rate in profit per annum of 40% per year. Our fair value for this stock is at 22.9 based on PE to growth of 1 time, translating to PE of around 40 times. PE for the year 2017 would decline to around 29%. This is considered to be a growth stock. Second one is SPCG. The company has 3 businesses in solar farm development, EPC, OMM, and business of roof sheets and construction, and business of solar rooftop installment. It is now considered Thailand number 1 leader in solar power. Market cap is around 520 million US dollar. Currently, SPCG is the market leader in solar energy business with 36 solar farm projects currently in operation with generating capacity of 206 megawatt under the adder tariff system with the highest IRR in the country, renewable energy space. Growth prospect would be from both Thailand and overseas. The first batch of license under solar farm scheme for state agency and agricultural cooperative are expected to be granted in the first quarter, and the company is expected to win around 40 megawatt of solar capacity under the scheme. It also invested in a 130 megawatt solar farm in Japan. The first phase of 30 megawatt is currently under development with commercial operation date to be around third quarter. And the second phase of 100 megawatt is scheduled for fiscal year 2017. So we see good performance growth, especially in fiscal year 2017 onward. The company is also considered attractive in terms of dividend yield. In addition to the strong growth in earnings driven by future project and interest expense saving through refinancing of project loan with new debentures, dividend yield is roughly around 5%, the highest in the renewable energy space. For SPCG, our fair value is at 24 baht based on sum of the part valuation. This translates to around 9.3 times PE and 2.2 times price to book value. The last one is a very small company with market cap of only 74 million US dollar. TKS Technology produce and sells business form, security forms, digital printing, continuous printer, continuous computer, and warehousing management. What we like in the company is that we expect earnings to recover in the fourth quarter with profit rising 93% year on year to 64 million baht. This will be driven by high margin work and also a sharp jump in profit from a 38.5% subsidiary called Sinec, which has better performing. In whole, for the full year 2015, net profit is estimated at 280 million baht, flat, but still paying a good dividend. Looking into fiscal year 2016, the company has set up joint venture both at home and abroad to broaden its product and service offering, receive overseas work, and bring new product into Thailand. Some of the joint venture has already seen order on hand. There are also seasonal work opportunities from printing of UEFA Euro 2016 lucky draw postcard, and also we expect the company to print the referendum ballot on the new constitution, including copies of the draft charter for distribution to at least 19 million households in advance of the referendum vote. The second half dividend yield is still at over 5%, and this is based on expectation that result will be flat comparing year on year. The final dividend is expected at 0.4 baht a share for the second half. Looking ahead, we forecast steady growth in revenue and profit and consistent dividend payment. For TKS, our price target is at 10 baht a share based on PE of 12 times. So this is an end to our presentation. If you have questions, you can email to us. Okay, goodbye.